Everything down for the day, stocks, bonds, and gold. You're listening to Charting Wealth's Daily Review for Friday, the 9th of November, 2018. Our book is for sale. Thank you to everyone who has purchased it. You can also support us at Patreon. You will see in the show notes links to purchase the book, to go to the Patreon page and support us. If you enter any of the levels of support, you will automatically get our once-a-month Q&A session. If you go into that middle level of support, you get a 15-minute call every month to help you track your learning, go through individualized support, and do all sorts of things to help you, plus a lot of other benefits. The quarterly charting technique, our Bitcoin charting technique, all sorts of good things. But to get you started, and you also get a free copy of the book at that mid-level. And you also get, after a couple of months of support, you also receive a year's supply of our Trader's Journal. Those are also for sale at the website. Okay, guys, let's jump into, and appreciate everybody who supported us. Let's jump into the S&P 500 first. Down for the day, 0.18%. Now, what do we see going on? Well, we see a green up candle for the week, just barely moving past so far where we started the down movement in the prior week. It is a green up candle, definitely. Long wick on top. And typically, when you're reading typical candlesticks, of course, these are Heikin-Ashi candlesticks, that wick on top shows you how far the bulls have driven everything up and then how much the bears have driven it down. So again, we do see a long wick on the top, about the size of the candle itself, a little bit longer. And of course, it is pushed through the weekly trend line after 4 weeks of strong down movement, 4 prior weeks, 5 weeks of sideways sliding. Don't forget, we are still in a confirmed down move. Weekly chart still heading down. Derivative oscillators losing some downward momentum. Price percent oscillators heading up. But still, all things being equal, the market moves in the direction, tends to move in the direction of the largest chart until there is a big change. Now, as we look at the 2-day chart, how did it end up? Well, looked like we were going to have a crossover going up yesterday. The first day of this latest 2-day candle, however, was not enough energy to do that. Derivative oscillators in the positive, but the price percent oscillator did not cross over. So we're still in the territory of a confirmed down move also on the 2-day chart. Now, we do have 6 days of up movement, but keep your powder dry. Pay attention to where things are going. Derivative oscillator, definitely positive. Price percent oscillator heading up, looks like it's poised to cross over. But we'll see how the market wraps up on Friday. Let's look at this 4-hour chart. Up movement in the morning, pull back in the afternoon. Now, are things topping somewhere at the 281 level or so? Well, it has been for the last 3-4-hour candles, so that's a day and a half. Derivative oscillators still gaining upward momentum. Price percent oscillators lost a little bit of that upward drive, so watch, pay attention. If it's a big down morning, you might have a jumping in point going down because, again, the 4-hour chart is in a pullback, but we have a potential setup with the 2-day and the weekly in confirmed down move. So just watch. It may happen, it may not. If it does, pull that trigger on a practice trade in the afternoon. I don't think there's going to be that much down movement, but what do I know? I'm following the charts, letting them lead me. I'm not trying to forecast what's going to happen. I'm going to trend follow if it happens. Do you guys get what I'm saying there? That is so critically important. You cannot push a trade. You try to do that, the market will kick your tail. Don't do that. Let the market guide you. Okay. Let's jump into the Qs now. Much bigger down day for the Qs, 0.64% versus 0.18% for the S&P 500. We have a very small candle. In fact, it's not pushed through the down movement in the prior week. Does have a long wick on top and also has about the same size wick on the bottom. It's what you call a spinning top, which means indecision because the bulls and the bears are fighting over a candle, tending up because it's a green candle. Derivative oscillators losing some downward momentum. Price percent oscillator still heading down, not as strongly as, of course, it had been in those prior 4 weeks and has pushed through the weekly trend line. We go to the 2-day chart on the Nasdaq 100. What do we see? Well, again, not moving up nearly with the speed that we had seen in the strength in the S&P 500. We see up movement on the 2-day candle ending on the 2nd of November, a red spinning top, indecision tending down on the 6th, and then up movement on this latest 2-day candle ending on the 8th. Not as close to a crossing over on the price percent oscillator. Derivative oscillator has crossed over just barely. And we go to the 4-hour chart. What do we see? Again, the same kind of topping, but this has been going on for about 2 days, around the mark of, 175. So again, keep your eye on things. Derivative oscillator still gaining upward momentum. Price percent oscillator is heading up. But if we end the week with a crossover going down, be ready for that on the 4-hour chart to jump into a trade. Might not happen until next week if it happens. But again, just be primed, just be aware, just be ready. Okay, let's go now to bonds. Leaving stocks, what do we see going on with bonds? Down for the day, barely, 0.01%. So again, that's 1/10 of 1%, not much down. But we have a down candle for the week. Derivative oscillator is losing some downward momentum, but the price percent oscillator is still heading down. We go from the weekly to the 2-day chart. What do we see there? We see a sideways slide for the week. Basically, we see a doji, means lots of indecision, tending up since it's green. Derivative oscillator is still negative. Price percent oscillator is still barely negative. It's heading up, but it's staying there. So again, primed with the 2-day and the weekly in confirmed down moves, just barely on that 2-day. And the weekly, what's it doing? Well, it's trying to cross over going up. I mean, you can see that it's tried to do that, but with the down movement for the day, it wasn't able to do so. Now, if you see a real pull away from almost a lamination there, can you jump into that down move? Well, here's part of your problem in doing that, is that the derivative oscillator is still gaining downward momentum. Remember, your best times to jump in is when you have a crossover that includes the derivative oscillator flipping at the same time that the price percent oscillator, and I'm just giving an example on the screen right now as to what happened to show that. Not that this was a potential trade, I'm not saying that. But again, when we go back to the 31st, and we may have jumped into that, I'm just trying to give you an outline of what it looks like. I have to go back and confirm everything then. That may not have been. It probably wasn't a trade because the 2-day was probably in a confirmed up move at the time. But looking just on the 4-hour chart, it's what it looks like. 4-hour chart crossed over going down in the morning on the 31st. Derivative oscillator flipped over and the price percent oscillator flipped over. Same time. What happens when that typically occurs? You have a longer running move, and that's exactly what happened. And that worked. So again, watch for that. When you have something that pulls away from a lamination, if you see the derivative oscillator go negative, that of course might be a jumping in point. Sorry for being a little long-winded today, but I know how much you guys like the lessons that you can glean from the charts and how much it helps you in filling out your notes on your daily market worksheets, which are available for free in the show notes. And you can also find the same ones if you want to purchase the Trader's Journal. But again, start with just the free stuff and the PDFs that you can download and print out yourself. Okay, let's go to gold. Gold down for the day, 0.22% now. Gold's in a confirmed up move on the weekly chart. But of course, in the prior week ending the 2nd of November, remember, all weekly candles end on Friday. You don't call a weekly candle until it ends. That was a down week ending the 2nd and really sort of a sideways slide, and we're going into our second one. Even more indecision, tending down. Price percent oscillator still heading up, derivative oscillator flat. We go from the weekly to the 2-day. And of course, the 2-day appears to be heading down. Hasn't crossed over, so it's still in a confirmed up move, but it has violated the 2-day trend line, of course, and the weekly trend line. Derivative oscillator continuing to lose downward momentum. Price percent oscillator heading down. And we go lastly to the 4-hour chart. What do we see there? Well, it's continuing to head down. Now, if for some reason gold turned around and crossed over going up, we're still in the margin to jump into an up move. Don't know if it's going to do that anytime soon. Did end the day with an up move, cut its losses at the end of the day. So again, pay attention to all those things, and we'll see how things shape up. Be sure tomorrow at the close of the market, we will be recording our comprehensive review and forecast. That's where you use your weekly market worksheet. So stay tuned for that over the weekend. Thank you so much, my friends. Some great training here for you. We will put those videos at the end of the program today. And of course, if you are listening via audio and you want any of the training, go to chartingwealth.com. Sign up for our email always. You'll get the daily market review, the weekly market review, and all the special trainings we put out in your email. And again, if you want to purchase the book or be a Patreon supporter, God bless you. All the best, my friends, from the whole team here at Charting Wealth World Headquarters.